Welcome to the Deep Dive. Today, we're diving straight into the latest from electric vehicle and battery giant BYD Co. Ltd.
That's right.
We've got their first quarter report for 2025 right here. Tickers are 01201HK and 81211HK in Hong Kong and BYDDF in the US for anyone tracking.
hmm
Our mission today, pretty straightforward. Let's quickly pull out the core insights from this financial snapshot.
Yeah, just understand where BYD is positioned right now.
Exactly. Let's get straight into it.
Absolutely.
Yeah.
And, this report, it immediately paints a picture of significant momentum.
Okay.
The operating revenue, for instance, has surged. It's at RMB 170.36 billion.
Wow.
Yeah, that's a substantial 36.35% increase compared to Q1 last year. Really highlights the strong demand for their vehicles.
And I guess that impressive revenue growth must have flowed down to the bottom line.
It seems so, indeed.
Yep.
That profit attributable to shareholders,
Yeah.
it's more than doubled.
Doubled.
Yeah, RMB 9.15 billion. That's a remarkable 100.38% year-over-year jump.
That's huge.
And even if you strip out any, one-off items, extraordinary gains or losses.
Right, the underlying number.
The underlying profitability is still super strong. Net profit after those adjustments is up 117.80% to RMB 8.17 billion.
Okay, so that suggests their core ops are not just growing, but getting more efficient too.
That's a good way to put it, yeah. Looks like it.
So profits soaring, but I did notice the operating cash flow took a bit of a dip. What's the story there?
That's an important point to consider. You're right. Net cash flow from operating activities did decrease
By how much?
by 16.9% down to RMB 8.58 billion. Now, this could indicate a few things.
Like what?
Well, perhaps related to increased investment in working capital as they scale up production. More money tied up in inventory or receivables, perhaps.
Okay, that makes sense with growth.
It does. But it's something to keep an eye on in future reports, definitely.
Yeah.
See if this trend continues alongside that profit growth.
Right. Let's shift over to the balance sheet then. Any key changes there that stand out?
Definitely. Total assets have grown. They're now at RMB 840.53 billion.
Okay.
That's a solid 7.30% increase just since the end of last year.
And the equity.
Even more notably, yeah. The total equity held by shareholders has jumped by nearly 26%.
26%.
Yeah, up to RMB 233.36 billion. This really strengthens their equity base, gives them a solid foundation for, future growth and any potential challenges.
Were there any specific shifts in assets or liabilities really driving that change? Anything specific mentioned?
Yes, a few things. We saw a significant decrease in receivables financing down over 45%.
45. Why is that?
The company says it's because they're using more endorsed or discounted notes. So you can think of it as a shift towards maybe more immediate forms of payment collection.
Okay, got it.
And at the same time, prepayments for things like materials are up by 30%.
Which suggests?
Well, it suggests they might be securing supplies for, anticipated production increases, locking things in.
Makes sense. And inventories. That's always crucial for a manufacturer, especially in EVs right now.
Exactly. And inventories have increased by a substantial 33%.
33%. Wow.
Yeah, up to RMB 154.37 billion. And BYD explicitly states this is to keep pace with increasing orders.
So directly linked to that revenue growth we talked about.
Directly linked. They're building up the stock needed to fulfill all that customer demand.
Okay. And one final point maybe on the balance sheet. Those development expenditures saw a big jump, didn't they?
They did, yeah. A significant 69% increase, almost RMB 860 million.
69%. What does that signal?
It's a strong signal that BYD is heavily investing in future tech, future products. R&D, basically, right? This kind of increase in capitalized development costs, it's often a precursor to new models or technological advancements that could further strengthen their market position.
Okay, interesting. Turning our attention now to the income statement in a bit more detail, beyond the impressive revenue and the associated operating costs, which also rose. What else catches your eye there?
Well, the finance expenses figure is dramatic. It shows an increase of over 880%.
880? That sounds alarming.
It does, initially, yeah. It might raise concerns. But the report clarifies this is primarily due to increased exchange gains.
Gains. How does that increase expenses? That sounds counterintuitive.
It is a bit counterintuitive, you're right. But essentially, favorable currency fluctuations have positively impacted their bottom line. It's just that the accounting rules categorize these gains in a way that increases the reported finance expenses line item.
Ah, okay. So it's an accounting thing. The underlying economic event was actually positive.
Precisely. It's a nuance that's really important to understand. a seemingly negative number reflecting a positive event.
That's a critical distinction. Okay, what about other income sources?
Other income also saw a healthy rise, up 83% to RMB 3.30 billion.
And what's driving that?
A key driver here seems to be increased government grants related to their everyday business activities.
Ah, government support.
Yeah, that kind of support can be quite significant for companies in strategic sectors like, new energy vehicles.
Sure. And any other notable changes on the expense side, apart from operating and finance costs?
Yes. We saw a significant improvement in impairment losses on credit. They're down almost 93%.
93% down, so better credit management, lower risk of bad debts.
Seems like it, yeah. Suggests better management there. However, it's also worth noting income tax expense has also risen substantially.
Okay, how much?
By about 84%, but that's really a natural consequence of their significantly higher profits, right?
Yeah.
More profit, more tax.
Right, makes sense. Okay, let's circle back quickly to the cash flow statement. We touched on the operating cash flow dip. What about the financing and investing activities?
Right, so the net cash flow from financing activities saw a massive swing. It increased by over 830%.
830% increase. To what?
To RMB 38 billion. And the key factor here is the proceeds from the placement of new H shares during the first quarter.
Ah, the share placement. That explains the big inflow.
Exactly. It significantly boosted their cash reserves. Now, on the investing side, the net cash flow became more negative.
Meaning more money going out for investments.
Correct, indicating increased investment in things like production capacity and, as we noted earlier, those development expenditures, building for the future.
Right. That H-share placement back in March, that seems to have been a pretty significant event then.
Absolutely. By placing nearly 130 million new H shares, they didn't just raise a substantial amount of capital.
Right. The 38 billion RMB inflow.
Yeah, but they also broadened their shareholder base. They brought in more institutional investors.
And that usually signals.
Well, it can often signal increased confidence in the company's long-term prospects from the financial community.
Okay. And looking at the shareholder info, beyond the big holders like HKSCC nominees and Chairman Wang Chuanfu.
Yeah, this capital raise has further diversified that ownership. It's also kind of interesting to note the connection mentioned between Mr. L.V. Shangyang and Mr. Wang Chuanfu.
What's that?
They're older cousins, apparently, with shared interests in Youngie Investment Holding Group. Just highlights some of the maybe established relationships within the company's leadership structure.
Interesting detail. Okay, so as we sort of synthesize all this information, what are the key takeaways for someone looking at BYD right now based on this Q1 report?
I think the headline here is just strong growth. Simple as that.
Yeah.
BYD delivered really impressive increases in both revenue and profit, and it's clearly driven by their leadership in the new energy vehicle market.
Okay, strong growth. What else?
Well, while the operating cash flow saw that temporary dip we discussed,
Right.
the significant capital injection from the H share placement has put them in a very strong financial position. Lots of cash.
Okay, financially strong despite the op cash flow dip.
Exactly. And their increased investment in both production thinking inventories and development, R&D. It suggests a company that is not just capitalizing on current success, but also aggressively planning for future expansion and innovation.
Looking ahead.
Definitely. And maybe finally, that unusual situation with finance expenses, the one driven by exchange gains.
Yeah, the counterintuitive one.
It just underscores the impact that global economic factors like currency fluctuations can have on their performance. It's something to watch.
So a really compelling picture overall. A company in a strong growth phase, investing heavily, and navigating global factors. Thanks for breaking this down with such clarity.
My pleasure. It's quite a report.
It is. So that was our focused deep dive into BYD's first quarter performance. We've pulled this directly from their official report to give you the essential insights. Now, for you, the listener, think about these financial highlights. What do they really tell you about BYD's current strength? And maybe more importantly, its potential trajectory in this rapidly evolving global automotive landscape.
Yeah, and this leads us to, I think, a key question moving forward. With BYD showing this remarkable growth in revenue and profit, clearly fueled by its dominant position in the NEV sector, plus this recent successful capital raiser, how will the company navigate the increasing competition and, the geopolitical factors out there? How do they sustain this impressive momentum through the rest of 2025?
That's a crucial question indeed. A lot to watch. If you found this concise analysis, this deep dive valuable, please make sure to subscribe to our YouTube channel.
Yeah, Definitely subscribe.
We do more focused deep dives just like this one. And hit that bell icon, too, so you stay updated and never miss our latest analyses.
It really helps us out.
It does. Your support is what enables us to bring you these targeted breakdowns. Thanks for joining us on the deep dive.